This is a day trade in NVDA on December 27th, 2016. The setup is NVDA, after an extremely long and strong run up, is now in an overbought condition. It's also been developing a climax top. You can tell by the trendline acceleration and then the multiple gap ups. You can see that most recent action is very parabolic, and that kind of price movement is not sustainable. I'm not going to just run out and short the stock. I'm going to be looking for signs of weakness in the price and trend structure. And once I see that weakness, then I'm going to try to execute a day or swing trade, depending on how the action plays out. This is my day trading screen. I have 4 time frames up from extreme left to right. I've got the 60-minute, the 10-minute, the 3-minute, and the 1-minute chart. You can see I already made a trade. I shorted earlier, made a small profit, and now I'm short again, 1,000 shares. Throughout this video, I'm going to speed up the tape because there are several long periods where not much is happening and it's pretty boring. But whenever we get to something important, I'll slow it down. As you can see here, I've gone ahead and I've, on the 1-minute chart, created my risk-reward ratio expectations, and then I've also put a stop in. Everyone's always asking me to show them my losing trades, so you can see on the 1-minute chart the triangles. That marks a losing trade. I went short there, price went up, it hit my stop, and I was stopped out. The risk-reward drawing tool is set for a reward of 3. In this instance, I risked 30 cents, so a reward of 3 would be 90 cents. I try to keep a pretty clean chart. What I have on here, at least on the 1-minute, is just price, the 5 and the 20 EMA, and then a couple of swing highs and swing low markers, and then the MACD. I have the MACD set outside of traditional parameters because I like it to lag a little bit more. You can also see that on some of the charts I have a regression line channel. It's a 30 period with a 2 standard deviation, and then on others I have a Bollinger Band, which is a 30 period 2 standard deviation Bollinger Band. On the 10-minute chart I have the open, high, low, and close of the prior day. Those are the little very thin lines, and then I also have the open, high, and low of today's trading day. On the 60-minute chart, I have volume, and then I have an RSI 5. When you look at the charts, the green solid line is a 5 EMA, the brown solid line is a 9 EMA, and the blue solid line is a 20 EMA, with the exception of the 3-minute chart. I'm currently experimenting with a 15-minute EMA. You can see on the 10-minute chart as well as the 3-minute chart, it looks like a double top might be forming, which is why I went ahead and shorted it. I shorted it without any signs of real weakness because I know from experience that a double top short is often a high probability, especially around this time. By entering as close to this double top as I could with minimal confirmation, I'm able to have a very small and tight stop to control my risk. A big part of trading is being patient. You can see after I entered, it entered a slight horizontal consolidation. It's finally just now starting to break below that area. Patience also means not being in a hurry to move your stop to break even. You want to have a plan, you want to follow it, you want your stop to be logical, not arbitrary. You want to have a repeatable methodology, not only for your strategies, but for your stops as well. So here I've sped up the tape so that you can see how price begins to develop and move in my favor. One thing is important to keep in mind is stock prices rarely go straight up or straight down. Very often they have pullbacks, and those pullbacks can create places for trend lines, and then price can continue to check back to that trend line through the duration of the run, and that's on any time frame, whether you're trading daily charts, 60-minute charts, 1-minute charts. Often you'll also observe a trend line acting as the boss for the run. Sometimes a move up or down will be contained by the 20 EMA, or on a daily chart, maybe the 50 EMA. It varies from stock to stock, but it's important to try to identify what the boss moving average is. Where does the stock continually find support and resistance? Also, prior congestion and consolidation areas and breakout areas can end up being future support and resistance. Does that mean you just jump out if you see price nearing a prior area of resistance? No. What you want to do is you want to observe how price behaves as it approaches support and resistance. You want to look for signs of strength and signs of weakness in the price structure. On the 1-minute chart, you can see a large bullish bar that bounced off the blue line, which is the 20 EMA. There's no reason to freak out because there's a large green bar. What's important is to watch it and see what happens. More often than not, it will result in a range. I want to draw your eye to the fact that I drew a second risk-reward ratio parameter onto the chart. The original one was based on my initial stop at 116.79, putting the reward at 115.59. But because the stock isn't acting the way I anticipated it would, price isn't moving at the tempo I expected, I'm beginning to lose conviction in this trade. Because I'm losing conviction, I'm lowering my expectations for price movement in this particular stock. What I've done is I've adjusted my reward based on the actual risk. And the actual risk is the maximum adverse excursion. Price wasn't able to go all the way up to 116.79, but it did move against me to 116.65. By adjusting my risk from my initial risk to the actual risk, I'm able to revise my expectation for the reward to something more realistic based on price behavior rather than anticipated price behavior. I'm a big believer in scaling out. A lot of times I'll go all in, but scale out. It's a kind of a hybrid approach. It also depends on if I'm planning on adding to my position as the trade goes on. As you can see, price is beginning to reach this new risk-reward area based on actual risk. So this might be a place that I would begin to consider scaling out, especially if price is not behaving bearishly. It's not showing signs of strength in the direction of a downtrend. Whenever I'm trying to fade a strong uptrend or enter at a place where I think there will be a reversal from the uptrend, I always try to manage the trade as a scalp trade. So what does that mean? It means I often have lower expectations for the reward in the trade. That also means I'm more vigilant for signs of bullish strength. And it means I tend to rely on the 1-minute chart a little bit more than I normally do to spot signs of strength and signs of weakness in price action. So as price approaches this new target area, I have a choice to make. I can put in a limit order and get out at exactly 116.05, or I can wait and watch to see if there's signs of strength or signs of weakness in the price action as it approaches this area. I could exit right now and get my order filled and have a reward of 3 based on the actual risk. I prefer to observe price action before I decide to exit. I'm willing to give up a few pennies for the possibility that price is merely going to consolidate around the 116.05 area. So I'm not a fan of how price is acting right now around the 116.02 to 116.12 area. So I'm going to go ahead and tighten up my stop. I'm going to be scaling out, and my limit orders hit. I'm out of half of my position. I let the remaining half ride, but I'm also going to watch price action very carefully, and depending on how it continues to unfold will determine whether or not I tighten up my stop on the remaining half. I usually also tighten my stop at this time. I'll either bring it to the new 116.65 risk level, or I will bring it to break even. When price isn't behaving the way I want it to, one of the things that I try to do is look for areas of resistance and or support. Where might price find resistance? Where might price find support? I look at the previous price action. I try to find price congestion areas. I try to identify swing highs and swing lows. I try to identify breakout bars or breakdown bars. I try to pay attention to the moving averages. Is price able to move above or below a moving average? Was the breakdown or breakout below a moving average? Is price going to go back and retest that moving average? So in this instance, I've identified a little congestion area and I've put a perforated line on it. That's going to be my line in the sand. I've tightened my stop up to the actual risk of 116.65, and if I see price starting to move above the white perforated line of about 116.35, more than likely I will go ahead and adjust my stop even more. I'll tighten it down to the break even area. You can see that NinjaTrader has just put another swing high level onto the chart, which is just a few cents lower than where I put mine. If price should move above either one of those areas, then I'm on high alert. From this point on, we have a lot of really boring sideways action, and this is where discipline really comes into play. You can't be so uptight and so stressed out from a little sideways action that it causes you to break your rules or tighten your stop too much. While you're waiting for price action to unfold, you should also be taking advantage of that time to develop the second leg of your game plan. What if price does start to move in your direction? Will you scale back in? Will you scale back in the same amount that you scaled out? Will it be more? Will it be less? What's your plan? Where exactly will you try to enter? It's also prudent to look at the larger time frames and keep an eye on not just your little piece of the trade, but a bigger picture of price action and trend structure. You want to continually reassess the trade and evaluate the signs of strength and signs of weakness in the price action. Context is so important. What's the market doing? Has this stock been in an uptrend or a downtrend? What's the MACD doing? Whatever your indicators are that you use, are the moving averages sloped up or down? Where is price in relation to the Bollinger Bands? Where is price in relation to a swing high or a swing low? Where is it in relation to a higher time frame chart area of support and resistance, say the weekly chart or the daily chart or the 60-minute chart? Is it overbought or is it oversold on the RSI 5 on the 60-minute chart? Whatever charts you use and whatever charting tools you use and whatever indicators that you use, they're there to help you, and if they don't assist in putting price action into a larger context, then they're not worth having on the chart. You want to continuously look for and evaluate information that can frame your price action and your trade into a larger context. So my plan is if price breaks this horizontal consolidation area, then I'm going to re-enter with the amount of shares that I exited on. And it triggers. And so I enter. At this point, to keep in mind the bigger picture, I expand the 60-minute chart and I look at the trend that NVIDIA's had, and I highlight the trend line acceleration. The last few candles have been a parabolic move, and usually that's unsustainable, but it's been in a very strong trend, and it's so important that I keep that in mind. Once I've scaled back into a full position, I go ahead and I tighten my stop to the break-even level. I also make important notations on the chart as I'm trading. This was actually a late re-entry. I get a little distracted when I'm recording, so my attempt to scale back in was a little late. but I go ahead and mark that area on the chart so that when I do my post-analysis, it will draw my attention to areas that I can improve. Just as I drew my risk-reward parameters on my previous entries, I'm going to also draw one for my scale back-in entry, set an area of risk at the previous swing low, and then calculate where my reward of 3 would be. I like to always know where I am in a trade in relationship to the risk. So at this point in the trade, I've already scaled out at one point with a small profit. I've re-entered. I've tightened my stop. I have a new reward target of 115.24. Depending on how price behaves as it gets to that area will determine whether or not I try to lock in some gains or if I let the trade run. As price starts to move in my favor, I'm not celebrating. I'm starting to look further out at potential areas where price might begin to stall. And one area I notice is on the 10-minute chart. I can see that there was a horizontal price congestion area at around 115.25, which also happens to be around my target area for my scale back in position. So I'm going to be watching price very carefully. If I see any kind of hesitation at that area or any signs of weakness, I'll more than likely go ahead and lock in some gains at that reward ratio of 3. I probably won't scale all out. I'll probably only sell half, depending on the price action. So I am starting to see some hesitation around that area. I'm going to go ahead and lock in some profits by tightening up my stop with a buy limit order for half of my position. If it doesn't get filled quickly, I'll switch to market order. So the order got triggered. It filled at about 115.35, 34. And now I'm going to monitor price even more closely. It looks like there's a little bit of strength here, a little bit of support at that area I identified on the 10-minute chart, that horizontal price congestion area. This time I'm going to start thinking about tightening up my stop. I still have half a position. One thing I like to do sometimes is link my stop to a moving average. In this case, I'm going to use just a little bit above the 20 EMA as my final line in the sand. We'll see if it triggers. So here I'm speeding up the tape just because it kind of goes on for quite a while. Some sideways action, very, very boring. You can see that price is getting very, very close to my stop, just a few cents away. And now there's a little price weakness. We see a bearish bar to the downside, which is exactly what we hope to see. But the real key is follow through, and I'm not seeing evidence of a lot of follow through just yet. There's some long tails on the ends of these candles, which suggests some buying pressure to me. So I'm going to become even more cautious. It's coming back down to test this prior area where it found support on 1, 2, 3 other occasions. NinjaTrader 8 has a really neat feature that will allow you to trail a stop and have it linked to any indicator that's on the chart. So I went ahead and I linked a trailing stop to the 5 EMA after splitting my 500 shares into 2 separate orders. I've got one that's ready to go in case support kicks in at the 115.24 area, and then I've got another 250 shares that I'm holding back at the previous swing high. And you can see that that trailing stop that was linked to the 5 EMA on the 1-minute chart did trigger and got filled. And so now I just have one final position of 250 shares, which I'm going to hold on to just by the off chance that this is a little fake out move. It allows me to participate in another potential leg down, while at the same time taking some risk off the table and locking in some profits. If support at this area collapses, it could lead to a big move down, so it's worth it to me to risk 30 cents. So if price does turn around and move back in my favor, I've got to have a plan based on the speed and the tempo and the strength of the price move down. Am I going to add back shares? If so, how many? Good trading requires that you're constantly looking ahead. Price action is dynamic, so it's important to remain flexible. So it's looking like that my stop's going to be taken out. Yes, there it is. It's triggered. That support held. So I had 3 trades. The first one was for a small profit. The second one was for a small loss. And then the third one was for a pretty decent gain, scaling in and scaling out based on price action. All in all, it was about a $750 to $800 profit for all 3 trades combined. While I'm trading, I'm always looking for ways to improve, and there are several instances in this particular stock and these trades where my performance could have been much more precise. So that's something I'll be focusing on for the next round of trading. Hope some of you find this helpful. Good fills, everyone.